Okay, I thought we'd do a quick fun video here for you guys. Let's go through 10 stocks that are trading at or around $20 per share today. And a lot of these are providing some good value in my opinion and maybe some good buying opportunities. I'm going to share them with you and I hope you enjoy this video. Now, I won't be going in depth with any of these picks. The point is just to give you some ideas so you can go do your own research. But if you have any questions, comments, suggestions, leave them in the comment section down below. I read every single comment and we can have a healthy discussion down there. Oh, also just a quick note, if you're curious as to what stocks I'm personally buying or holding, check out the link description down below to our VIP membership group. There you can see every position in my portfolio and I let you know exactly when I buy or sell any stocks. Now, let's kick off this list. CLOUDERA is down 50% from going public in 2017, and although their name implies what space they play in, the cloud, and despite cloud companies thriving right now in this environment, CLOUDERA is severely overlooked by investors and seems to continue to struggle. CLOUDERA provides a software platform for data engineering, data warehousing, machine learning, and analytics for companies that have cloud or on-prem deployments. At a current market cap of just $3.5 billion, this is a company that's looking very undervalued right now and could be a multi-bagger over the long term. Number 2, SMILEDIRECTCLUB. It's a big player in the orthodontic space and their stock is down 36% from going public. The main competitor here is Align Technologies and personally I prefer that business. SMILEDIRECT's approach is a bit different here because they plan to go direct to consumer, skipping the middleman kind of approach and passing on those savings supposedly to customers. Now if you go on YouTube and just kind of do a quick search for SMILEDIRECTCLUB reviews, it's kind of been mixed. I wouldn't say that it's a product that I would personally trust and try out myself. However, there are many people that are happy with it and the company continues to grow. So far, the performance of the stock is lacking and currently sits at around $4.55 billion market cap. So SMILEDIRECTCLUB could have the potential here to double or triple as an investment if the direct consumer approach pans out for them. So next up is a company that hasn't recovered from its IPO, Switch, but it is in a growing space. It's down 23% off of its IPO price and has struggled to gain ground. They are a provider of infrastructure for cloud services, essentially offering super secure data centers for cloud solutions, and Switch manages the whole facility. It's an interesting approach to cloud, and if you believe that data centers will continue to increase in demand over time, and I think that they will because most businesses will be moving to data centers at some point if they haven't already, then a business like Switch becomes very interesting as a possible investment. Now this may be one you haven't really looked into or heard of before, but they are a pretty sizable business. So Box.com is a name down 40% currently and is a player in the cloud storage space. They compete with a lot of companies, and that's kind of one of the biggest drawbacks here for this company because they compete with giants like Google Drive, Microsoft OneDrive, and it seems like the recently popular Dropbox here on YouTube. Box.com, however, trades at a fraction of the valuation of Dropbox. So if you believe this sector has growth ahead of it with all these players fighting for customers, this could be an interesting one to look into under a $3 billion market cap. PLURALSIGHT. So this one is a stock that's down 50% and it's one I covered in a recent video and went much more in detail about as to what the company does and why this could be a good investment opportunity. In a nutshell, they're a company that offers training courses for software developers, IT administrators, and creative professionals for skills required for businesses. With the world in a remote state currently, these skills are very important and I believe the market is overlooking the potential of a business like PLURALSIGHT here. Are you enjoying the video so far? If you are, smash that like button down below for the YouTube AI. Next up is a hot new IPO, Rocket Companies, and it just makes it under that $20 mark right now. It's down around 34% off of its highs, but this is such a new IPO that we could see a lot more volatility, and it could very easily be down 50% or more in a blink of an eye, so that's definitely a risk that you're taking on here. That being said, this is a big company, $40 billion market cap, so it's a reputable name, and if you believe the mortgage industry needs to be disrupted and changed and improved on, Rocket may be the business that does that. Now, this may be a company you've probably never heard of before or come across, but the stock is down over 60% currently, and it's mostly come in recent months. This is a company in the aerospace industry, AAR Corp, and they provide aviation and expeditionary services to the global commercial, government, and defense aviation industries. As you know, this industry is currently hurting right now as a result of the global issue, and of course that means this company is also hurting, but this could be a very big turnaround play, but it does carry a lot of risk. It's a $700 million company today, so it's fairly small and speculative at this valuation. However, their fundamentals still look strong and their future still looks good. I believe this is one that could possibly be severely undervalued today if you believe the macro events going on in the world will improve over the next 3 to 5 years. Alright, getting into our tail end of the list here, Nokia makes it at number 8. And this company has been making headlines recently, but their stock is still down 91% from its peak during the dot-com bubble. So it has struggled for many years and is now sitting in penny stock territory, at least with the price per share. However, their market cap is still a $22 billion company, so it's far from a small business. This is a complete leap of faith investment in 5G infrastructure, in my opinion, because Nokia has lost in other spaces before. They used to be dominant, but they're not anymore. And 5G is supposed to be their saving grace. Is it worth investing at these current prices? Well, it is a sizable business. They are playing in 5G. They are winning a lot of contracts currently. So this could be a good turnaround play over the next few years. Number 9, Ford, an American icon, but its stock is far from being an icon or respectable because it's down near 80% as it's gradually declined over the last couple of decades. Now, the reason that Ford is in the spotlight currently is because they're pushing for EVs, and this could be their saving grace to become relevant once again. Now, if they fail at this venture, it could be a continued slow and steady decline for the business, but if they can come up with a good EV, especially for their F-150 trucks, which is the best-selling vehicle in the US, it could be a big turnaround play. Now, this is a higher risk investment in my opinion, despite being a $26 billion company. But if that EV bet that they're making pans out, it could have a good amount of upside here with some good dividends. Alright, so now let's get into our last pick, and I'm going to give you some closing thoughts after this pick. So GE is our final pick, and it's another dinosaur company, but I had to include it here. It's down 90% from its peak, and it's not a pretty story. There's no way to sugarcoat this, really. But the question is the worst behind this company? Being a $55 billion giant, they have some weight still, and although we're sitting near multi-decade lows, this could be a great turnaround play as the company shifts its focus and business to become relevant once again. But at this point, it's still unclear if they'll ever be able to successfully do this. That being said, many investors love GE because of the cheap stock price that they have. But if this company interests you, do some digging into them. They're not the same business as they were a few years ago because they did sell off a lot of their segments. So you'll want to understand how the new company is doing before putting any money into it. So this list kind of had a mixed bag between some new innovative growth companies, some, mediocre companies that have been around for a while, they're chugging along, and then we have some dinosaur companies that are hopeful for turning around their business to become irrelevant once again. Now again, these are just ideas for investments. Make sure you do your own due diligence. I've covered a lot of these stocks in individual videos, so if you want to check those out, check out the description down below. I'll try to link as many relevant videos as possible. But I hope you guys enjoyed this quick kind of summary of what's going on with the market and some discounts that I saw on potentially undervalued stocks. Let me know what you think of these companies in the comment section down below, guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.